we're looking at the stock market as we come back from the weekend. There's a few things we're talking about. The Nasdaq 100, the S&P 500, obviously taking a bit of a tumble, but it comes on the news of the addition to BRICS. You have Saudi and the UAE moving into this. Now, there's a lot of commotion about this. We saw the dollar get a lot of love. We saw yields bounce as well. On top of that, we saw Bitcoin run almost to 46K. So there's a lot of question marks in here versus risk on and risk off and how much this will actually impact the market. But we have a lot of those answers when we look at what's happening specifically with volume and a lot of these key levels in between. So have no fear. We know exactly what we're doing. We know exactly how we're going to attack this. And ultimately, we know exactly how we're going to make money through these opportunities. Let's get right to it. First thing I want to do is go over QQQ and SPY. I think this gives you one of the best visuals as we go into a little bit deeper. And we'll go into the Nasdaq as well. So what you can see here is we kind of came back into these lows of 402.8, and then we came back into 400. We'll talk about here in a second. So when we look at what happened, you saw that initial gap down, obviously. Now, what you really wanted to happen for bulls, and I think this would have played out if it wasn't for this news, right? So you got the break, got the retest, and you were bouncing at the end of the week. This was really good. This is like, you know, Christmas present, awesome. Beginning of the year, couldn't have gone better, right? It was looking really, really strong, okay? Now, fast forward to now, obviously you got that news, things didn't go as planned, we gapped down. So we came to this level, we didn't hold, and we pushed down to the next one. This was all mentioned like in Discord, we went over a lot of that stuff, but we'll go deeper here in a second. Also, too, I want to say one thing. Consider liking and subscribing, it helps the channel tons, but I don't want to waste too much time on that. But let's jump in a little bit deeper, okay? So you can see we come into that 400 level, 402, key level there. We go into SPY though, and SPY, in my opinion, is much better. Getting rid of some of these levels so you can see a little bit more clearly. You know, you're holding up a lot more. Yeah, you didn't even come back down to those December 20th lows, nowhere near. So like again, flashback here so you can see. Okay, so what does this tell us, right? And before we get to what it tells us, you go to the Dow as well. DIA, what's happening there? Dow ending the day almost green, pretty phenomenal. So the Dow looks good, SPY looks okay, and Qs look terrible. Right, so you're getting kind of this approach to the market going in a downtrend there, right? But, you know, Dow being at the top of that trend. So when I look at the market, we look at a few sectors. XLV, healthcare, very good day. XLF, banks, very good. You know, XLI, right? A little bit of a pullback, nothing terrible. But then you go to XLK, tech, not so good. XLY, consumer discretionary, not so hot, right? A little bit scary coming down in that range. SMH, semiconductors, right? So a lot of the pain is coming in semiconductors and tech. The rest of the market's still looking very healthy. So that's a few things we have to discuss and attack first. Okay, so as we attack this, a few things we need to understand. What were some of the biggest things going into summer that kept us up or that really made us break out? It was when we started to get the love and started to get the breakout on other sectors rather than just tech and semiconductors, right? Beginning of the year, it was all tech and semis, and then we started to see Dow names pop off as well. So what we're seeing right now is a cool off, in my opinion, with tech primarily. Now, when we go into the dollar, we go into yields, you'll see that that's where the weakness is kind of stemming from. Now, we go into a few other things, and I'm going to mention, and I didn't mention IWM just yet, but I'm going to mention here in a second. IWM is holding up pretty great, and you tried to hold 200 for a bulk of the day as well. So again, the areas that you're seeing the selling on is primarily XLK and semiconductors, right? XLK being tech names, Microsoft, Google, you know, Apple got a really big downgrade on the day as well. So those are areas where you're seeing the pain. But now you want to see if it leaks over into the rest of the market. And this is something that I said on Twitter today as well, is you need to be very careful moving forward. Even if you start to see a bounce, you have to be careful because right now it's all about how the market is interpreting this news and how it's going to move forward. Now we're going to have Fed members talking, you know, probably next week. So again, we'll get some more impact from that. But this week's not very news heavy. You have some non-farm payrolls, but that's about it. No inflation data or anything along those lines. And then we got to attack what's happening to US oil. Okay, so this link will be down below just so you guys can check this out. And this is what's happening primarily with UAE and them, you know, being administered into that. Again, this isn't all just about oil. We need to understand that. What's happening with UAE and Saudi is not primarily just about oil. It's about investing in general in China and Russia, right? Now, the UAE has been pretty clear that they don't want to disconnect from either side of the market, the West or what's happening with BRICS, right? They're trying to have their trying to have their cake and eat it. Okay. Now, eventually, Kaka's going to hit the fan and they're going to have to choose, what are they going to do? But right now, with the demand on oil being so low, it's not a question right now. But when you go back to the charts, we look at what's happening with oil, and oil is getting hammered, right? Oil over the past 8 hours has gone from 73.5 down to lows of 70. And again, we go back to something like the weekly, you can see that we are pushing back towards those lows back into, 2023, this year, right? So this is very concerning. You could argue it's like a giant descending triangle. Pretty gross, not gonna lie. So anyways, oil, pretty good for what's happening. But what I will say though, on top of this, what has been one of the key indicators for declining inflation data, oil and the dollar. So again, we'll go over to the dollar real quick. We go to the DXY. The DXY obviously getting all the love. And that's why I say this. There's sometimes news you can't anticipate. Like what's happening with BRICS. I couldn't have been on Friday, oh guys, guess what? You need to watch out on Monday because BRICS, they're going to get the UAE and Saudi, and it's going to cause a lot of problems, and who knows what's going to happen, right? That's very important to, come to the realization when you're trading. These are the dangers. These are the risks that you're taking, okay? So the DXY looks like a once continuation bounce from support as we had down there, and you're slowly making higher highs and higher lows since the lows on December 28th. Now, where the real fun comes in is a US 30-year yield. This is, I think, what everyone has to be watching, okay? This is it. Now, I've been talking about this in Discord for a little bit, and I want people to understand the associated risks. Sorry for that burp. That was kind of gross. Not gonna lie. It's been a long day though, right? So what you're looking for here, you got to break out of this range, right? And I'm mentioning this range, right? The 4% is the level you want to hold below, but you're in this little bit of a range. Okay, you've been in this since basically the 14th, about half a month, give or take. You broke out. You're kind of trying to hold, and probably if you hold this for any longer, you're probably gonna get a push to the 200 SMA, right? And you might see this roll over into stuff like the 10-year as well, which are already almost there as well. You go to the 5-year and the 2-year, all getting a little bit of love. So it makes sense that while the dollar is bouncing, now guess what? The yields are trying to follow as well. The question is, how long can this sustain, and how long do markets keep this into play? Especially if the Fed comes out with more of this narrative of cutting rates and happiness across the board. We saw the IMF mention today as well, right? They said the Fed is on track of a soft landing, exactly what they want, right? So again, we have to kind of interpret all this information. I'm not telling you, and I'm telling you right now, I'll tell you from personal right now for myself. I am not going long at this level yet. I am not going long. What do I need to see before I go long? I want to see us get back above some of these levels, 16.8, maybe even 17K. But for now, I'm not. I'm just being careful. I'm acknowledging the trend that we're in, which the trend so far, if you go to the weekly level, this is clearly still a very bullish trend, right? Can we all agree? Yes, you're still clearly bullish. But again, just like the daily time frame here, we had to acknowledge you were flagging, but you had downside opportunity into the 200 SMA. So again, when we watch this, head on a swivel. I'm trying to pay as much attention as possible. But on the short term though, what I'll tell you right now, keep it very simple for you. If we stay below 16.8, and then we're gonna trend in this little spot here, right, from 16.6. And if you follow on Twitter, which I recommend that you do so, again, this was all put out there for you. Right. So again, earlier 2 hours ago, right? 2 hours ago, I said rejecting losing 16. Actually, I said way earlier here. This was this morning, right? So this morning, I said right here at 16.7, 16.8. I was like, you're at bounce or die territory. If you get below 16.6, 16.2 is your next level, which we'll get into here in a second, right? So all those levels are mentioned here. Okay. Now, if you break below 16.6, there is a high possibility you'll pull back into 16.2. High possibility. Let me just show you this liquidity here. You got nothing. You 16.2 is being generous. Okay, it's being very generous. But this level here, from right here, under 16.75 into 16.2, the liquidity is minimal. Very, very minimal. So keep your head on a swivel. So that's why I'm saying, day trading, I like the opportunity. You start getting below 16.6, your boy might be hammering puts all the way back down to 16.2. Okay, but again, I am watching 16.6 closely. I am not jumping the gun. I am being patient. I am being vigilant. I am waiting for the opportunities. What do we want to see? A break and retest. That's how we make our money on these trading days. Okay, so I'm going to be really clear here. When I'm looking at the market, I'm not just blindly going short. I'm not just blindly going long. And I think right now more than ever, right? I got stopped out of a lot of my positions on Friday. That was the big thing. And I looked, I was like, it sucks, but I had FOMO and I steered clear. Thank God I did, right? So when we look at what's happening here, again, I still believe what you're looking for is opportunity for the upside. As long as the Fed keeps pushing a narrative of soft landing, inflation's going down, over time, mortgage rates will continue to drop as well with this idea. And then rate cuts down the line, you're still bullish. You still look good. But again, it's you're reacting to this information now. Okay, the market couldn't have priced this in. Obviously not. We saw the volatility on the dollar, especially today. We saw the volatility on yields today, right? It's been slow and steady downside, but when you start getting volatility on those types of indicators, that's where you kind of have to have some pause. We also saw the VIX bounce back to like 14.5. So again, getting a pullback, I'm all for it. And again, I'm not the guy that's like only bullish, right? If you rewind back to 2022, I was like only bearish, right? As long as the underlying trend on the weekly and daily lines up, I'm going to stick with that trend until it tells me something different, as well as fundamentals as well. Okay, so that's the way that I'm viewing this. I've already broke down over this weekend what's happening with, mortgage rates and everything else in between, right? That will continue over time if the Fed continues to push this narrative, okay? I don't think BRICS narrates everything. I don't think it's the narrator of the story. I think the narrator of the story ultimately is the Fed and what they're doing, and they've been the narrator of the story for the past year, 2 years, give or take. So that's what we're viewing there. Now, again, when I look at the market right now, there's not a lot of tech stocks that I'm like in love with, right? There's not things that I'm just buying yet. But I think there's opportunity definitely striking. I recommend that you're following on Twitter so I can just show you all those charts. I don't want to break down too many of them and give you a lot of just ideas right now because I don't want to waste anyone's time. Because right now, in my opinion, I do like the opportunity for a touch of 16.2. Now, I'm not confident in that enough to where I'm holding overnight, right? Because I think sellers should have pushed you down already today. So I'm respecting the action that's taking place here. I'm being patient, being vigilant, but I do understand the opportunity. We looked at that VPVR chart and you saw there was not a lot of liquidity. Those are trades that I like to take. When you get that breakdown, the odds are definitely in your favor. And I'm not talking about the Hunger Games, although this is similar, right? So when we look at what's happening here, I like it. Okay. You got some weakness in some of your big tech names. You could still see some more downside. But I'm going to tell you this too. When we look at some of these names, they're going to have good opportunities very soon as well. Okay. So you got to be paying attention, paying very close attention. The things that are going to help you the most though, to spotting a bottom. Okay. And I'll have this all posted on Twitter as well. The dollar. You want to see if the dollar starts rejecting off the key levels. Okay. About 102.4. Yields. Can the yields actually get back below 4% and hold? That's your real long indicator, in my opinion. Once that happens, it's like a really big indicator. Go long. Okay. Names like Apple, you need the bleeding to stop. Okay. Microsoft, you got to continue to hold these key levels or blood's going to come quick. Okay. Nvidia, all semiconductors, these are the ones really hurting you right now. Okay. I think there's a lot of opportunity, but again, just be patient. Let them come to you. Stop trying to take what you think you can take from the market. Start looking at the market from a viewpoint of what can I take and what are you trying to give me, right? So what are you trying to give me and how can I take that, right? That's how you got to view this. So when you're looking at the trend and you can see a giant pullback maybe to 16.2, I'm respecting that we're still in an uptrend, but I'm looking at it from the viewpoint of we're in an uptrend, but you're giving me the opportunity from 16.6 to 16.2. That's 400 points on the Nasdaq, and that is a money-making opportunity. That's how I'm trading. That's how I'm viewing it. If you have questions, comment down below. Also, too, you know what? Jay's going to murder me. There's like 2 spots left in Discord. The link is down below. Tap in if you're interested. Have a good one, traders.